day organizations, when we meet with customers and they say we want to be able to measure our groups, we want to be able to measure what we do and how we do it. So obviously the biggest component is people, right? Being able to measure your people. Are your people being productive? Are they being profitable? Is always key measurement for any organization that's delivering services. What do we deliver? Our services offerings. Every group has different products and services that their people are supporting. Are those the right products and services? Are some services more profitable than others? How are we doing on some services versus the others? So these are all kind of questions that service organizations and groups in general are asking themselves. And then, are we achieving our expected earnings? Are our projects profitable? Are our service offerings profitable? Again, all questions that hopefully you've all been asking within your organization. So what did the successful organizations do? They are measured. You should be measuring your group. Measure meaning what's been happening, what has happened in the past, versus trending meaning what's happening in the past and what do we expect in the future. And if we have trends that we are not happy with, being able to go in and adjust those trends, adjust processes so that we start trending in a correct direction. Predictive, what do we expect the future to look like? This is where a lot of PS organizations really struggle with getting really good predictive data on their services and their projects. And then being proactive. Do we need to hire based on our predictive, based on our measurings and our trendings? Do we need to hire people? What does the future services look like? So all are different measures that should be looked at. From all these different measures, you come up with those KPIs that work best for your organization to help support these. So there's a lot of different KPIs that are out there that we've seen with different customers. So being able to take all the different KPIs that are available and then being able to streamline those for your organization to be able to determine, what are the best KPIs for our people, utilization, compliance to processes, capacity or demand, making hiring decisions. Those are some KPIs that we often help our clients put together. From our service offerings, project margin, what projects are doing well, which projects are not doing well, and where do we forecast projects that may be in trouble. Looking at schedules, budgets, being able to see, resource schedules versus dollar budgets, and be able to determine, what service offerings are our most successful. Customer satisfaction and, bid to win ratio, being able to determine how of the opportunities coming in, how many of those are getting converted to wins and why, and how can you improve that ratio. Obviously, at the end of the day, it's all about the earnings and the dollars, right? Being able to measure how are our offerings, what kind of revenue are we getting on our offerings, what's our backlog? This is a very common request we get from PS organizations, is how do we best track backlog, and more importantly, and how do we forecast? Being able to produce a valid, accurate forecast is always a challenge. Being able to see profitability by resource, so this or revenue by resource. So we see this from time to time, organizations wanting to measure. What's our average bill rate? Even if you're not a T&M shop, what are you, the dollars you're billing, the hours you're spending to deliver those services, what is that calculation, is that average bill rate? And those can be great parameters of how successful you're being. Margin reporting, gross margin by project. Especially we see a lot of organizations really wanting to understand not only what the margin is, but why did the margin be less than what expected. And then DSO, which is your invoicing success, being able to achieve from invoice creation to invoice. This is generally more of a ERP financial type of calculation, but you can also, from a PS perspective, it's always good to know which what's a successful DSO, and what can PS do to support that metric. So how do you start? You're starting to build the metrics, and I just had this conversation with clients in the last couple of weeks. It's like, okay, so what are the questions that you need to be answering about your professional service organization? What are the services that are driving your earnings? What services are not so successful? What types of resources are driving your earnings, and how do you best utilize those? How are you versus what you quoted versus what was delivered? From the point that you put a proposal in front of a client versus, at the end of the day, what did you actually deliver? How successful are we in that process? How is your resources staffing? What types of staff? What types of resources? What is your schedule? Bench is always a big killer for PS organizations. And again, the same realm. Where's the time being spent? So if someone is spending 40 hours a week, how much of that time is billable versus non-billable or productive billable? So different categories depending on what you're trying to measure. So once you've got your questions you need answered, then you really have to go in and say, what are the KPIs that we can get out of our system, and so that we start to measure those regularly. The key to that statement is really measuring it regularly. You need to be able to develop a repeatable process for getting KPIs out of the system that takes minimum effort but maximum effect on the organization. So obviously OpenAir provides a lot of flexibility and options for building reports, building dashboards to basically take those KPIs and then make those achievable by being able to run those reports and view those dashboards. You've got to commit to a cadence to review the KPIs regularly. I see this as a fundamental problem with a lot of organizations is they say utilization is important to us and we want to measure it, and then we measure it, but then no one ever looks at it. It's never communicated. It's not made of importance to the organization. And so just because you decide to measure something, if it's not going to be beneficial or you're not going to look at it regularly, then you're probably wasting a lot of people's efforts. And if you are looking at it regularly, being able to take actions. If utilization is low, what do you do to get it up? What kind of actions come out of the KPIs? At the end of the day, what KPIs do is basically give organizations a direction on where to take action, where to act, so that the organization can be better, more healthy. So let's talk about some of the OpenAir, and I'll jump into a sandbox account and we'll take a look at a few things. But one of the things that I get a lot with customers is utilization. Utilization, we can't get correct utilization, or we need to get correct utilization out of OpenAir. How do we do that? So we work with a lot of customers to help those utilization reports. And utilization can be generally backwards looking utilization. So how did we do in the past? You can also do predictive utilization. So how are we looking in the future and being able to calculate? And a lot of companies struggle with that. There's some things that, there's some features that are available to help make utilization reporting much more accurate. So for example, custom calculations. So every organization we work with defines utilization slightly differently. Some base it on billable, some base it on billable plus productive, some take out holidays, some include holidays. There's all types of ways you can determine what your percentage is. And so using custom calculations is the most effective way to define those utilization definitions. So being able to configure your system. So if billable utilization, what is considered billable? Is it billable because it's been run through a billing rule? Is it billable because the task was marked as billable and people put their time against it? So all of those decisions need to be made as to how best to calculate utilization, and then OpenAir needs to be configured and then to set up to support that KPI and then your reports have to be built to also support that KPI as well. And using custom calculations with filters is probably the most effective way to get to those calculations. User entity tags is another feature that we recommend often with our customers, and this really helps in being able to keep utilization for groups accurate. So, one of the things that skews utilization results is when people join a group mid-month or leave a group mid-month, and we don't want their utilization for time they're not actually within the organization to actually cloudy the utilization calculations. So being able to determine what the start date for that individual is, what the end date for that individual, and make sure that your utilization is only calculating for actual time when the people are within the group is very important for getting an accurate utilization report. Target utilization, this is something we see a lot from customers as well, where it's not enough just to say John was 70% utilized. Well, what was John expected to be? Is 70% a good utilization, or is 70% a bad utilization? So if using the target utilization feature, you can actually set goals for John, and you can set goals for John from the start by saying he's a lower utilization until he gets within 6 months of the organization, then he goes into a higher utilization target. And then be able to report on those targets versus actuals, and be able to determine how John's doing versus what he's expected to do. And each individual can be assigned a target utilization so that you can have it very customized for the organization, and that can give you some really good information. If you're doing past utilization, you've really got to have strong timesheet processes. You have to understand when time is entered, what periods are valid for reporting on, and understand, are you using approved hours, worked hours, and so, if you're doing, for example, semi-monthly timesheets, you probably can't do utilization reporting until, for the previous week until you get into the next period. So just understanding your timesheet process, what challenges you may be having there, and how that could affect utilization reporting. If you're looking at forward-facing predictive utilization, obviously resource schedules are a major component. Where are people expected to be? What's the future projected utilization? Using the bookings generally is the most common of people looking at their bookings and where they're going to be. And then you have to have a process to keep that data accurate, or as accurate as possible, and that gives you that ability to forecast utilization. I'm going to jump into OpenAir real quick here. So talking about utilization, if you can come up with a good metric and you can come up with a good solid report that's built properly, then you can get a good, nice dashboard you can build around utilization. So for example, being able to look at billable utilization, billable hours, forecasted booked hours for the next 6 weeks. All of these are really nice dashboard graphs that you can build. These are obviously based on being able to generate an accurate report that gives your calculation. Being able to utilize these, come up with the right calculation using CumCalcs is really critical. So being able to determine, let's see what our billable one here is. So here is a billable utilization example of one utilization calculation. So here we're using billable hours, which is a calculation in and of itself to determine what the utilization is. So you determine what's the definition of billable hours. what's the denominator that makes sense. In this case, we're using base work schedule hours, which in our example is just Monday through Friday, 8 hours a day, and you're using that to determine what our utilization is. So being able to come up with using filtering within the custom calculations to come up with, for example, what is a billable hour, and being able to filter those calculations to get to that number. Using this method, you can get to pretty much any utilization calculation required. Let's see. Mention a couple of other features. I'm just going to point them out real quick. User entity tags is something that we use with a lot of clients. Looking at, having different, the main tag group we use is whether someone was employed or not, or what their status was, and if they were employed, and if they weren't, what dates were they not. So this is a really nice way to be able to incorporate that accuracy into your utilization reporting. And then being able to do target utilization again. So here you can say within these dates, the utilization targets were X, and then being able to include those in part of your metrics. Forecasting. So forecasting is, for me, if you can do really good forecasting in OpenAir, it means you're doing a lot of things in OpenAir really well. So being able to come up with predictive forecasting or predictive backlog reporting is basically an output of being able to manage your charge projections properly, being able to manage your billing rules, your revenue rules, as well as your scheduling it properly as well. So, charge projections are obviously a key component of being able to be predictive from a dollars perspective. How many dollars of billings do we expect to happen in future months, or dollars in revenue recognition? And obviously, in order for the charge projections to work appropriately, you have to have those work in conjunction with your billing rules and your revenue recognition rules. And if you're doing backlog reporting, you may want to look at, what are our budgets versus what are our actuals versus what's projected. So being able to determine those reports. And you'll see here we have a couple of dashboards that we've done for our organization of being able to say what's our 6-month forecast, and be able to look at that not only predictive but also trends, and then also look at what's been billed versus what's budget across the organization, as well as you can also do that on a project-by-project basis within the reports. The key to forecasting, obviously, is being able to do a couple of things. Let me jump in OpenAir real quick here. First and foremost, you've got to determine how do you want to forecast, and that's based on how you set up your charge projections. So what's the basis that makes the most sense for your organization? You can have booked hours be the basis. You can do approved and booked. If you're doing project management and assignments, you can use assigned hours as part of the calculation as well. So depending on how you're managing OpenAir, how it's set up, you got to determine what's my best view of future activity for my groups. There's some new features that came out towards the end of last year that allow you to kind of limit the projections, which is a big help in helping the projections run faster. One being is you want to exclude your inactives, and also you can limit projections to only certain project stages. So for example, here we're only looking at live projects, which then again helps us to be more efficient when we're running. The other feature that came out last year was they expanded the relative range options. So you can now, a lot of clients wanted to say they always want to look forward from this week forward and use this week forward for projections and use last week and past for actuals. So you used to have to do that very manually. Now OpenAir allows you to be able to go in and be able to set this. Most customers say, if I'm in this month forward, I want to project last month, and previous I want to do actuals, and then you can do calculations that create actuals plus projected, so you get one nice number in a report, and current month forward is a forecast and previous months are all actuals, and gives you a nice, and it doesn't give you those forecasting in the past, which a lot of customers run into. Obviously doing revenue recognition forecasting as well as billing forecasting, and then being able to run those forecasting projections every night so that every morning you have a nice fresh set of projections. And obviously this works in conjunction depending on what type of organization you are, what type of projects do you run. If you're a T&M shop, then the forecast is basically going to be as good as your schedules are in OpenAir. If you're a milestone type of billing organization, then and you're doing projection of billing, then your projections will be as good as your milestone-based time billing, fixed fee billing rules are set. If you're doing revenue recognition, you can base your forecast on percent complete or other potential revenue combinations. Then obviously that's as good as your revenue recognition rules are set, as well as your schedules of your resources. So there's a lot that goes into really to doing forecasting well. It's more of an art than a science. It takes a buy-in from the entire organization to be really successful at it. But once you really, if you do it well, then you can pat yourself in the back. It means you're really using OpenAir the way it was designed. Project margin. So this is this can be a really long conversation that we have with clients when they say we want to be able to do project margin. What does that mean, and how accurate are we looking to get? And what is your organizational thought around costing in OpenAir? Because project margin is really based on, how do you want, what costs go into that, and how accurate are those costs? So obviously, as service organizations, people are our most expensive resource generally. So how do we cost our people? Are we costing them based on an individual salary? Are we doing some sort of a blended cost? Do we want to adjust costs if someone is a salaried employee and they work 200 hours in a 160-hour month, but we don't want 200 times their cost rate to factor in because that would be over costing us? Are you doing some sort of an adjustment to their hourly rate for that month to get them into the correct costing? How does that spread across projects? So there's a lot of decisions and discussions needing to be had when you start to figure out how to do project margin. But once you have all the components in place, it's really, really beneficial to be able to run a report and say, okay, this project is 50% margin, this project is 10% margin. It gives you a really quick way to say what's going on in this project. And also gives you some predictive as well as trending. So looking forward, what do we expect our margin to be based on our resource plan? You can go in and do predictive profitability margin for projects, which again also is a great KPI for determining if projects are going off the rails in some way. Obviously, user cost is a key component, but it's not the only component. Some organizations, a lot of organizations, have other elements of their project. You have expense reports, for example. You may want to exclude expense reports. You may want to include expense reports. If you're doing some sort of fixed fee without expenses, then you may want to include expenses as part of the margin since it's not a pass-through. You may have other types of costs that you need to track. So you may have things you buy, equipment for a project that needs to factor into the cost. So then you can get into using the purchasing module in OpenAir and being able to enter those POs or quick POs in the purchasing module for those non-labor, non-travel expense related costs, and then include those as part of the overall cost equation. So determining what costs you want to measure, how do you want to measure them, what's your process and policy around user costs. In OpenAir, you can track 3 costs per resource, which can be very helpful. A lot of times what we do is we see with customers where they'll take the primary cost and they'll use that as a pretty accurate individual-based, salary-based cost. But then in the roles, you can limit who can actually run reports using that cost. So only maybe executives and above, and you have to look at how your roles are built to make sure that you are doing protection as you would expect. Then you may want to have an average cost, like we see in this screenshot, as a secondary cost. So then you take all my PMs cost me $70 an hour, all my developers cost me $50 an hour, and then those are more those are reports that you build that give your project managers and other department managers maybe give them access to, so that they can get a thumbnail of how are we doing on this project. And then there is actually another cost you can use depending on if you have a business reason to do so. So being able to store that cost, report on it, again, using custom calculations to be able to add up all your costs into an overall costing number, depending on what costs you're looking to add, and being able to then do those calculations based on either revenue or invoicing amounts to determine margin. You can actually also do percentages using margin and revenue to come up with what the overall gross profit percentage is for projects. So jumping again into OpenAir quickly. So go into global settings. So going back into user record. So again, this customized sandbox account, but basically we would store user cost data and be able to then pull that into reports. If you're mostly looking at time-based cost, there's two ways to run reports on time-based. You can run reports based on the standard cost, the top cost. You can also run it on the actual cost, which then looks at the dates down here to determine. So if you're giving people increases year over year, you may want to store those historical costs. So when you run reports in the past and marry them up to reports in the current period, that you're able to get accuracy there. And then also, as I mentioned, you can have expenses, and then obviously some of you may or may not have a purchasing module, or you may store non-standard, non-time and expense costs to be able to get profitability for those types of items. So in summary, I just mentioned a few KPIs that are beneficial from OpenAir. Obviously, there's a lot of KPI opportunity within OpenAir. Again, each organization needs to determine what is most important to them. Make sure you put your measures in place, be proactive, look into your trends, don't get too crazy with KPIs. The more complicated they are, the more likely they are to not have much meaning to the organization. You want to start off simple, have some very strong, and make sure that as you're building these KPIs, the reports you're building them on are accurate. The last thing you want to do is build bad reports, and then obviously your KPIs lose all of their meaning and become ignorable. And also there's a lot of best practice. TopStep works with customers to have best practices. Some other places you can go to, you see here, to determine best practices.